All right. Hello, everyone. And I am DP Anderson. Of course, it's not my real name. So I'm going to make a series of videos that will demonstrate and help you, especially accountants, to code in SQL or to learn how to query databases, use Python, VBA, whatever is necessary for your audits, right? In this series of videos, I'm going to make a database that is for accounting, right? So we create the uh, dynamics in accounting, the journals, the GLs, etc. Explain it and transition from basic accounting to database accounting, okay? So another question that you might ask, so why not Excel? Most of the accountants use Excel. Well, all I can say is that you could query the source, right? So most of these reports that are being used by auditors or accountants to audit, they're made by operational staff who are not really in the perspective of auditing or some legal requirements wherein it would not be enough for analysis, you know. So this video is just the basic, the overview of what we're gonna do in the following videos that I will make. Okay. So we have here the basic, you know, basic accounting, expedited basic accounting. So we have here the account ID, the journal, general ledger, and the FS. So in basic accounting, usually make a journal entry, then group it here so we can summarize it to make a financial statement, right? But since in database accounting it's already automated, this is not necessary to compute through a GL. It is automated from journal immediately to FS. For example, someone invested or in this business, so the owner obviously, so cash he invested. We'll just use equity. Let's say $1,000 for 9 accountants. Just follow. For accountants, you already know what's going on. So we for accountants, you know that in basic accounting we will use debit, credit, right? Something like that. But we will not use this now. Um, we will go directly to database accounting. So just pick up the the pace rather. So debit and credit. So instead of the indentation that we have in basic accounting, we will use this column to indicate if it's a debit or credit. So for non-accountants, it's just simple. Debit simply means left, and credit simply means right. So cash is a debit account, which means that its normal balance leaves in the debit side. Okay, so cash now is increased by 1,000. Meanwhile, the equity is a credit account and therefore it is increased by also 1,000, but it leaves in the credit side. So the credit accounts, it's a credit minus debit. It's as simple as that. So you just need to know, for non-accountants, you just need to know the 5 accounts, right? Asset, liability, equity. So the temporary accounts are the revenues and expenses. So these are debit accounts, these two right here, and the rest are credit accounts. So the formula for this is this one. So asset, liability, equity, revenue. Oh, I'm sorry. This expenses right here is a debit account. Okay, so just take note of it. It's as simple as that. You can Google it, right? So, but we won't be discussing that much here. So we have the first entry, right? So in the financial statements, I mentioned earlier that we will move from journal directly to the FS, right? So how does this go, right? So in database accounting, we have a column for posting because not all of the entries will be um, processed by a code for FS, right? Because the supervisor or whatever, whoever is your superior, would still look at the entries and review it, whether it is fit for balance sheet purposes. So if the supervisor approves it, then she or he will have a user interface to access this entry, so he can post it, right? Or give the accounting staff, to post the same entry, so it can be processed by the FS. So the code of the reports would be like, if posting is sorry, if posting is P, then we will process. So that's the show the code. Sorry, we will process. Right? Simple as that. But we will not compute it first because it's just the first entry. So the second one would be, for example, the business already bought inventory for sale. So inventory, for let's say 500, and so it paid 500 as well, right? So debit, credit. So we have now a new account here, inventory, and of course it's a debit account because it's an asset. So we have, no, sorry, we have a 500 increase of inventory, but we parted with 500 of cash, so we credited cash. So you look at the formula, it's a debit, credit, debit minus credit, because it is a debit account, cash. So we will decrease this by crediting 500 pesos. As you can see, the equity stays the same. So we need to go to sales immediately, so we can see the difference. So in sales, supposing we sold all of this, excuse me, all of this inventory, and for cash, just to make it simple, and we sold it for, let us say, 1,000, like a 50% markup, right? So inventory, 1,000, debit, credit. I'm sorry, it's sales. I'm sorry, that's a sales. This is also another temporary account. And for each sales, there is a corresponding cost that go with it, right? So this is a cost of goods sold. So the cost of goods sold would be equivalent to the inventory that we parted with. So 500 debit, and we have the inventory for 500. So you look at this fourth entry we have. As you can see, if we take this 2 out, it's like saying that we received 1,000 pesos and 500, parted with 500 pesos cash, and the income is 500. But we will not confuse you with that. So yeah, so we now go to the GL. We now go to the GL, right? So inventory, we parted with 500, and we have the sales here for 1,000. So cash, we received 1,000, and then we have a cost of goods sold there for 500. Okay, so So as we try to review, so the first entry we have here, 1,000 investment, right? This is the first entry. The second one, inventory, we bought inventory for sale. Yes, that's two. And then the third entry, we sold, right? We sold the inventory. So where were we? Yeah, this one and this one. And then we reflected the cost of the inventory that was sold. So that would be this one and this one. Yes. So we have a complete um, counting cycle now. So if we're gonna compute this, it's just a simple. So in basic accounting, we do it like this. So we add cash for 2,000 and then 500. So we deduct that debit minus credit. So we deduct this. So the balance here is 1,500. Okay. For equity, just stay put for now. So inventory, just that's zero. And sales, you have 1,000 and 500 for cost of goods sold. So as I said, these are temporary accounts or nominal accounts, right? Nominal or temporary, they are the same. So we in accounting we have what we call the closing entry. So we will close this nominal account by debiting, right? If it is a credit account, so for purposes of closing, so one, yeah, and then crediting it if it's a debit account. As simple as that. So what we have now is, as we said, sales. We debit that, so we will close that. Means we will close that, and we have a cost of goods sold. We have 500, and the remaining would be the supposedly this is income statement, but in the table this is actually equity, right? Because an income is just for purposes of reporting, but in the table this is an equity, right? So so we will post this three. So we already posted our fifth entry for uh, the closing entry for cost of goods sold and sales, and then the equity would be right here, posted right here. Okay, that would be our fifth and last entry. So now, supposing all of these are posted, or these are all ready for balance sheet purposes. These are all posted. Balance sheet would be simple. So we have a cash here. You have 1,500, right? 1,500. And then inventory, you do not need to put that because it's a zero, but let's just put it here, zero. And then equity. So we have basically 1,000, right? But if we are gonna compute, this is now zero sales, this is now zero. And we have here 1,500 equity. So this is 1,500. Now for income statement, it simply is we can just query the sales and the cost of goods sold here, right? So like I said, it's just a report, a code. You will not worry about those things because these are coded. So it will just simply pick up the sales and the cost of goods sold, even if it's zero, because like I said, it is coded. So they can pick it up whatever and however they would want it. So the sales would be like this, 1,000, and the cost of goods sold is 500. Of course, we did not consider operating expenses for simplicity, but this is how it will work. Okay, I hope I have covered everything. post some questions, so I will answer it in my next videos, hoping that I could improve my discussion. Sorry, there's one more thing. Cash flows, right? So cash flows, yes, cash flows is very important. Seldom discussed. So again, there will be code for cash flow statement, right? So yeah, but I could not discuss it because it would entail advanced SQL, but it simply would query all the cash. So unlike the traditional one where you will start in the income statement, right? In the additional income statement, you will start with the 500. What do you call this? Income. But since these are all cash transactions, so basically your income statement is just your cash flows. Yeah, because there are no prepaid and accrued things like that. So we need not overcomplicate that, but it's just worth mentioning the cash flow statement. So I will explain the code later when we will discuss the balance sheet codes, the income statement codes, and the cash flow statement code. So as for now, that will be it. I hope that you will subscribe and support my channel. That would be a great help to me, and I will share to you my knowledge about data analytics in accounting.